Hi, everyone, and welcome to this 33rd weekly market analysis. Here is Francois Ablé. Hope that you're doing very well. Today is the 5th November, Monday. We're going very quickly in the season, the holiday season, and also the winter is coming also slowly, but we can feel like the cold right now outside. So yeah, it's the first time to discover me. I'm the main trainer and the founder of Global Street Trader Academy, which is the GSTA as you see on the screen. And you can find me through the different social media as well, which is Facebook, YouTube channel, Pinterest, Twitter, Google Plus, and also Trading View, which is like the with the pseudo Frank Belfort. I publish and posted many contents and also analysis and point of view of the market. So you can take a look there if you're interested, for sure. Okay, so let's jump in on the our traditional disclaimer, which is very important. Like through this period, as it's very important to reading about that, and it's your first time also to you want like make an experience on financial market. So don't be that full on that. Please be aware of this disclaimer. It could save your capital, right? So yeah, and like as you see at the screen, this program is not neither a solicitation or nor incitative to sell or buy any asset or any products or financial product will be covered in this video. I'm just sharing my point of view, my strategy for free, and if people are interested, they can duplicate it for sure. But I'm not responsible for their loss. Okay, correct. So. Weekly market analysis, as I said, November 33rd, the starting at the 5th today until the 9th. So this weekend, like before that, we getting Japanese session. I would like to tell you that please don't trade this week. Okay, it's a simply recommendation. After all, we are all elder. Everybody doing what he wants. Okay, I cannot impede people to not trade, but my recommendation is to not trade this weekend. Why? Because we are, of course, the election, the mandate midterm of Donald Trump as the United States for the so tomorrow, like the 6th. We have also the Fed decision for the rate interest at the I think Wednesday, right? So it will be very like we can see some like erratic off or probably incomprehensible movement on the financial market. So I don't want like beginners or intermediary trader won't go to play around there, right? You have just to stay away and just look at it and doing your strategy. You can take it this week to make sure that you understood the concept and the all the functionality of the market, but don't try the news and the bias, which is now like this spectrum, which is still over in the market, right? So this is my recommendation for today. Don't trade this weekend, okay? Just doing analysis and learn more on the product, okay? So at the summary of the presented asset, we have a forex USD CAD, Dow Jones, gold, and Eurobond, as I presented many times, and this is all that the product that we stock with that as long as we continue this program. Okay, so now let's jump into the financial market quickly, and we starting traditionally as our technical compass and fundamental also compass, which is the US dollar index, right? US dollar index currency for trading view with the platform trading view. So if you if you just going trading view, if you see this label here, that's me, Frank Belfort. You see, and you can take a look at my articles and post and other content. Anyway, so I'm still bearish, okay, on the US dollar currency index, as I told you, at the 97 0.1. So let's say 97 level. It's a level from, if I'm going to the like monthly, it's a level at the look at here, 1986. So it has been like past 32 years that we worked this level and we didn't like going through. That's why I said if we break it, definitely we could going to test the 100 points. But after that, we did not, right? So we just stuck below that, right? And we got a nice close below this terrific level. It's pretty around like a strong resistance, as also contained by the fork here, this free trend line in the blue. That I just draw it for proposal, just to let you know that the market could giving you the effect that is on bullish trend, but is not. It's just like lateralized and just stuck below this like strong level, which is 97 points, right? So that's why I don't want like be bullish on the US dollar index, because since long time we pretty much seen that the market's not like on the bullish trend. For sure, it has been on a bullish trend where he was starting at 90 point and then he's rocket after that. But now he's just stuck below this level, right? And if we get back to the daily, so please like be notice that we are daily, right? Daily time frame. So that means this analysis is a very is very like it's very strong, right? Because we not analyze the market as the time frame 15 or 5 minutes. We are in daily. So this moving average, which is the EMA, exponential moving average, has been like very pretty crucial, right? Because it's the annual moving average. For sure, we are above on that, right? So it could giving the illusion that the market, the US dollar is bullish. But if you look at it, the pace of the movement of this momentum, and also the pace of the this moving average, the moving average like tend to flatten, right? It's tend to flatten, and also the market going like it's starting to be like up, right? So that means this is the like contractive movement here is a just opposite movement, so it could show like the neutral of the market. So otherwise, to be bearish like me because of a bias, you can be just neutral because the market didn't show you clearly the trend of the market. And I know that we got some like a great move, a great figures macroeconomic data as the last Wednesday, the last Friday we got the NFP, and according to my calculus, the NFP, and based also to the third quarter of the GDP, we're not supposed to have this kind of NFP. So I'm very surprised to see that, guys. I'm very skeptical. Might be manipulated on the national labor statistic in United States. I'm expecting to have like a figures between like 159 to max 185, not 250,000 job creation. But anyway, it's the figure we were released, right? So we need to compose with that. So that's why it's just like puts the hourly average was like also stay stable, so it does not like putting some like pressure on the market. So that's why we saw the US dollar index like doing like kind of a green candle here, but that does not mean that the market could continue to rally. And we are just like stable, and we're just looking far away. What's the market? What would be the next things to take a look? We are the Fed decision on this week, so the Wednesday, and we are also the midterm like election on the United States, right? So that's why I told you to avoid to to be on the exposed on the market. So anyway, so here we are neutral. I'm neutral on US dollar index. Nothing to tell you more. We can going into to see quickly the S&P 500. I did not like doing usual, but it's important today to let you know. If you remember, I posted this chart, right, where I said with the title, the S&P has it's lost its way, right? And I said to my publishing that if we stay above the 2,600 level, we are not in bearish markets. We're not bullish run again, or like the as you said, the rally, the bullish rally, sorry, not the bullish rally, but the rally for the end of season, right? But we're not also in the bearish market. The bearish market will be if we pass through this 2,600. So don't be. I don't see people starting to make like a bearish strategy on social media and all that. Stop doing that, okay? Because you can be like trapped on that. If you break it 2,600, no matter what the communication around it, for sure we'll be in a bear market. But as long as we stay below that, okay, we can doing like a back and forth so many times and stabilize right there. Because if you see, we break it, the annual moving average, okay, and we reintegrate like quickly, suddenly, and we stay here, we're doing a gap, right? So that being said, when we integrated this level, that means that we are we invalidated the bearish signal. So now we could be like a neutral, or we don't know what has happened. Definitely, the market looking for the midterm and also the Fed decision, but don't be like trapped to just starting to make a strategy, bearish strategy, because you could have like a bad surprise, because the market could going up, like retest like a previous level, or also recrashing again and coming in this crucial threshold, as I call. Okay, so this is just like to let you aware about like the fact that we are not in bearish market, but we are not also in the bullish run. We just neutral right now. But in intraday day trading, of course, you can make some like day trading strategy to buy and sell like into the day. You can do scalping or intraday, but at the swing or long position on 2 days or 1 day, probably don't go to the don't doing like strategy for bearish, right? Like long bearish, or So let's jump to the Dow Jones. So Dow Jones again, we got the close, monthly close here. So let me just show you. So we got this candle here is the close for the October, right? So this level over here as a daily, it's the weekly demand here, right? So that means if we fell here, we can also do a correction until the white line here, which is 24,970. And for sure, this level has been like marked after the end of this presentation. So you can like, if don't worry about that for now. You can see also after the next like a PowerPoint where we have the strategy on that. So between 25,650 to 24,970, we can play around that on the intraday. But this weekly demand supported the kind of, it's playing the role as a resistance. So as long as we break it here, or we stayed around this orange zone here, short the market. Don't like, or you can stay away too, because this week is very crucial. So my strategy on that, and in intraday, to not be exposed. If you just if you want trade like absolutely, I recommend you to shorting the market, the Dow Jones, each time that we doing a new higher until this zone here, like this zone between between 25,275 and to 25,590. This zone here, don't trying to buy the market right there. And here is the monthly close. That's why it's very important to trying to work on it correctly, because we are for sure above the monthly close, but we are not in momentum, bullish momentum. Like, is not, if we zoom like very like, look at it, this like trend is not going to going, like, it's not like, this pattern looks like very bearish, right? Because we have a sell-off here, a bit like brief, and then a correction, massive correction, until this annual moving average for test. And then we have a retreat, like a bullish retreat. And now we close that here, and it's a red. So that's why it's just show that the sellers has been right there in the market. So don't going there to and want to buy the market, because after all, if you see like sharply, we could have some like a channel, right? We can evolve into the channel here. I can take the weeks, long weeks here. So look at it, we have a channel. So we can just continue to do like back and forth, but going until down, like way down to the to this previous level. So we test it here, we can fail it, and then going after that to test again, after that fail it, right? So it has been like this scenario that we can have on the Dow Jones. So that's why I recommend you to not be like in content trend, to not buy this market just looking for a sell. But at the intraday or scalping, you can do that for sure. You can scalp the market for 20 point, 30 point for sure. But if you want to take like probably 50, 100 or 80 points on the trend, be on the the way of the market is oriented. Here we close the market at the minus, like we close at the, we losing 110 points. So that means it's oriented to be like bearish on the Dow Jones. Okay. So let's go into the gold, right? So the gold is the same, also same song, same way, some song. We have our monthly close. We have also the weekly supply, because the market has been retreat a bit. We definitely, the gold is oriented to be bullish, right? But when, we don't know. We're probably expecting that the market could test. This is actually my level that I'm very overseas to buy at the 12.15 right here, and then to going on up. But we break this descending channel. We're doing some like a stabilization or like neutral for a bit, and then we can jump it and break it this previous level. Like the signal is 1240, and we have the moving average EMA here, and we just waiting about the time that we going through that. But we're looking for also a nice price to buy it. And for me, we can have also, is not finished, right? We can have also another retreat based on the geopolitics event upcoming, or we can have also some, if we have a kind of appeasement, political or geopolitics, we can have like a retreat of the gold, because some people which were there, they buy the market here and market rocket, right? The gold rocket until this level. So they might be take their profit, like partial profit, and then they just looking for another like lowest point to get into the market. So that's probably the scenario that we can see over that. That's why I'm not, I'm not worried about the level to buy. I'm expecting to 12.15 to 12.20, like this level will be definitely a great point to buy the market, like 12.20 or 12.50, 15. Okay. So that's what all of that I can taught you. USD CAD. So USD CAD, it has been also the close of USD CAD. I told you that USD CAD is definitely on the neutral scenario, because if you see also here on the monthly, you see clearly that USD CAD didn't doing anything like very good. You have a long wicks here. The intermediary body is doing the same pattern here at the red. Is doing again like a tweezer after, or doji, maybe a doji for you. And also he's doing also the same pattern as we found firstly. Long wicks is and like mid body, and doing again another time like a so on and so forth. So that's being said, that the market for on the USD CAD is not like oriented for a potential movement to upcoming. It's just like doing some, it's play around this level, which is like a range, definitely. So the weekly demand is still there here. The monthly close is there to, like to the aqua level here, and this is the monthly range. So it has been his play around here. We cannot see definitely if you want to go bullish or bearish. For sure, I have a bearish bias on that. So that's why each time that the market could go and fail this red zone here, I will probably short the market. Or if we break it, this crucial level, which is $30,450, as the historic level, as I call it, historical POC. So it works since like 1994, right here. And this level is very, very seen by the professional and institutional traders. So that's why I'm just waiting about that we break here to give me a confirmation that the market is oriented to going on the back. So that will be on the bottom of the range, and then we can get into the market to buy, because we can have a cluster here, which is the 365 EMA, so the moving average annual, and the bottom of the range. So it has been paid for that. Okay, good. So going to bond. So the bond has here, we see clearly that the bond is we were oriented to going after his double bottom pattern. We breaking this neckline here. He was oriented to going up, but is just he was just like blocked here by the moving average annual here, which is constitute the monthly close of the of October. So we didn't fill the market because of bad news on Europe, bank stress, and also like the level of interest on the debt that Italy and France or Germany also could not potentially finance. So it's just show the investor that these three countries are probably not solvable. So that's why we reintegrated this level. And at the previous weekly market analysis that I made, I told you that as long as we stay below 159 or 160, just looking for a bearish movement, right? But this is a weekly surprise for sure. So as also, if we come in here and we test here, we can buy this low here to just going into test an intraday only, the neckline. Or also you can waiting that we break in this level and just waiting for the short movement, right? So this is all of that I will show you on the technical. So let's jump now for the recap on the fundamental here, which is going with the all we said technically, as even is a long-term strategy, or no long-term strategy, but long-term charts that we study, which is important to know where the market will probably going, and at the forex and USD CAD on the short term, which is represent 1 week. USD CAD, we have on USD, you have also the Jamal Khashoggi case, which is still a bullish bias on the USD for sure, because it's putting some tension, negative perspective between Saudi Arabia and United States. We have also the election on the midterm, where we got the promise of the Mr. Trump, President Trump, to support the middle class with a tax cut program. The problem is this program is very expensive, as like the economic budgetive expansional policy, fiscal policy, and he need to have like a dollar very low. But at that time, the level of the debt of national debt of the United States, they can't afford to doing this kind of policy. So I'm very curious to know how we potential doing. I already make some like a comment on that on my like a TradingView article and post. So I just kindly recommend you to go into read it. And we potentially doing some like a next shot and another shutdown probably in terms of the administrative and federal financing to the United States, right? So we have also, after that, the strong macroeconomic short-term data as the NFP. Again, I'm skeptical to that, but I respect that. I agree with the fact they released that, but I'm not sure that we are we're doing like 250,000 on the job creation, and it's very I'm very skeptical for that. But I take account because is that we they release, right? So it's putting some like bullish effect on the US dollar and also the index. Is a positive perspective upcoming between US and China, which is the bullish bias, because Xi Jinping, China president, would like to meet Mr. Donald Trump, and he said they probably doing some like an agreement of the upcoming day. It will be probably also at the G20 summit, I think, to at the I'm not sure if on Argentina probably, but it will be between the G20 summit. Okay, so this is things put some like kind of a bullish like appeasement effect on the market. The Canadian dollar is a government ratifying a new trade agreement with the Asia and Pacific Economic Zone. As I already told you about that, with the TPGPA, which is Trans-Pacific Progressive Agreement, something like that. It's a kind of a way to diversifying like the economic perspective for Canadian dollar, instead to be and the USMCA, like the new agreement that they made with Mexico, Canada, and United States together. And we have also an hawkish comment of BOC to accelerate the rising rate interest above $1.75 as a bullish effect. So all of that is giving a bearish momentum on USD CAD, right? So it's just simplistic calculus. So it's forex market is a ratio. So if we are negative here and positive here, is a minus on plus is giving bearish momentum, just of that. And sorry, and Dow Jones is also the same thing, as we are the Jamal Khashoggi effect, which is bearish, is putting scare of the market. We have also the fact that the rising of a US $10 bond to 4% on the market, so the bearish bias. And we have also the strong NFP and stable pace of hourly average is putting also the bearish momentum of Dow Jones, right? The commodity, we have also the gold. Short-term 1 week, we have a central banks, they're increasing the gold net reserve. So this is very information to notice of that, because they could pushing higher the gold, even depending on what's happened on the situation or political on the market. So and it has been like first for it since 2013. So this is a bullish bias. And also the pressure of the rising rates on the bond yield also, as I said here, it's also putting a bullish bias, right? And any geopolitical events or tension upcoming, it has been a bullish effect, depending on what the market interpreted, because the possible meeting of Xi Jinping and Donald Trump is considering as the appeasement on the markets. So the risk could, the appetite for risk could coming again on the market. So we could see a gold like doing a retreat until the 1215, as I said to you, right? But definitely gold is oriented to be bullish, right? And to finish this program, Eurobond, we have a short term and 1 week. Even the QE rhetoric maintained by the Draghi, so is about the situation of the Deutsche Bank and others European banks. So that's why they can guarantee to finance the interest of the debt, which is $134 billion deficit on the budget. So if the Italy denies that, it putting like a very critical effect, a negative effect on the European zone, and also the political uncertainty on the Italy or German now has been subdued. They very playing easy for that, but it's not. They just starting to contain the skeptical movement and all the speculation around like the possible dislocation of the party for CDU, where Angela Merkel said that she won't run for the political, right? So they just like going easy with that, just to reassure the market. And no matter what, also the upgrades from the mark as by S&P Global Rating, as a Fitch, Moody, and all the stuff, they also works in the same direction to said we can find some like an arrangement with the situation on the bond and interest rate, all of the stuff. And the European bank stress also test has been failure for the Germany and Italy. So that's why it put bearish price. So that's why you see that bearish momentum on Eurobond, and we reintegrated the neckline as I show you on the first to this presentation. So the technical pattern recap here. So here this is the level that, so you can take a note if you want, or you can ignore that simply because this is my just strategy that I did. I will make for this week. And again, I won't trade this weekend myself. I just putting this strategy here just to see if the market could really going to this level, or we can have after the close for sure something which is going in this direction. But I won't trade this weekend, okay? Because there's lots of macroeconomic and political uncertainty, so I don't want to go with that. I don't have a crystal ball, so I don't want to play with that, okay? So this is the end of this financial broadcast. So if you like it, please support this channel, put a massive thumbs up, and share to your friends. Like, subscribe again to this channel. So don't feel free to ask any type of question if you want below this video, or send me just simply a mail at the contact@gstacademy in one word.com. And you can find me also through the social media. You can support this channel and support this work. It's just make me the value of what I'm doing for you as a research and also strategy. And I see you around for the next video. Thank you so much, and have a great day. Bye-bye.